we take the long based on the AI model that said 665 was our first target, and 669 was again is still our second target long. Once we're above the 10 SMA, we're just running long, running stop losses. One of our stop losses was the 660.77 that we've been talking about. The next, it was a 665 that we did see a little bit of rejection right before the close, but the 664 held. So as long as we're above all these dark pools, we're still back on an uptrend. Obviously, we want to break out over all-time highs. That'll confirm with some of the monthly and weekly long-term triggers, which are 7,400. But we want to get there once we have dark pools. So what are we doing now at 665.73? We're just running stops at the open of the market on Monday. If you have options, if you have shares, and they trade 24 hours, you can just keep your risk managed. If we hit 669 or 670 and this rejects, this is not a bad area to head short to come back down, possibly with failed earnings, maybe some more news. If we get CPI, if it's under 3% and keep repeating it, it's very questionable because all our AI models say it's going to be at 3%. Now, if the estimate is 3.1 and it comes under at 3%, you know that the algos will react as a positive, like an earnings beat, even though it is a higher print, right? So be very careful trading against on a short covering and an uptrend. But let's just say 670 rejects. You take your short back to the 665 pivot, back to the 660 pivot, back to 652 pivot, 650, and then we have a daily support at 642, but one level at a time. Let's just assume for the argument that 670 rejects, breaks under the 10 SMA because the daily and the hourly are bearish, but we are short covering on the 15-minute. If we get anything under the 652, grab a little liquidity. You want to go long again because we still have the new dark pool print at 675.